minutes. So I hope that was good time to well spent for some of you. That's great. I'm glad we can give that. All right. So the last section in chapter 13 is where we're looking. It's 13.4. This is a kind of a different section because the problems are not overly involved, but there's a ton of pages, but not a lot of like vocab or crazy important parts. There's a lot of explaining, and so it's just it's one of those things where it kind of sticks out to me, is all. All right, so this is the last section to this chapter, and this is the last section to this unit. All right, and then we'll continue to plug along, but then we'll have a reinforcement after our test, and we'll be able to move, continue moving forward. We're going to be paying employee income tax, the Medicare Social Security tax, and then we're going to pay unemployment, federal and state. Okay, that's what we're looking at. There's some phrases that are kind of confusing. This one is here, this thing that they call deposit. The payment of payroll tax to the government is referred to as a deposit. Okay, the two amounts determine how deposits are made. So how much we are collecting in payroll taxes during this current deposit period, pay period, this month or 2 week, however it is, and the amount of payroll taxes owed during the entire 12-month process. They call them deposits because some companies will have to pay quarterly. Some will have to pay monthly. Some will have to pay all the time, more frequently. And where our purposes, we'll be collecting payroll, paying it out, paying periodically, every 2 weeks, every month. Employers must pay federal, state, and local payroll taxes that are being withheld from employer earnings. That's something that you guys should be used to. They're always making a point of saying this isn't optional. These are things we have to do. But they call them deposits. The payment of payroll tax to the government is referred to as deposit, not a deposit into our bank account. They're just deposits. It's like payments, all right? But instead of payments, they've always called these tax things deposits. So if you see a deposit of taxes, that just means they're paying the taxes. There's this thing called the look back period, which enables you as they have your company, depending on how many employees they have, their wages, the payroll that you're withholding from their paychecks, you might do different on your deposits and payments of tax. Okay. The more wages, the more employees, the more frequently, the more the changes that will occur. Okay. And so they call this a look back period. A 12-month period ends on June 3rd of the prior year to determine how frequently businesses must deposit or pay these taxes. All right. There's like I said, just a variety of different ways. Now, this 941 thing that you guys filled out in 13.3, this is like one of those books when you're little. If this, go here. If that, go here. You do not need to memorize all this. Not at all. This is the idea is for you to understand not all companies deposit or pay taxes the same way. Some are required to pay more frequently than others based on the number of employees, based on the wages that are being withheld. If you can get that grand scheme concept, then you can follow charts. Have you accumulated tax liability of 100% or more within a deposit year? Yes. Do you need to pay taxes the next day? No. You follow an 100% rule during this last year, you're semi-monthly, weekly depositor. Okay. If not, you're a monthly depositor. Our company is going to be a monthly depositor, which means we'll be paying taxes on the 15th of the following month. So we will pay semi-monthly payroll on the 15th and the last day of the month. We'll withhold those taxes, and then we'll pay those taxes on the 15th of the next month. Okay. Just as long as you get the big idea, I think that's the most important. Making federal tax deposits, payments, okay? This isn't like test stuff, but this is just some background, okay? Employers are monthly schedulers for the first calendar year of the business. After a look back period, the period where they look at the 12 months and decide, should you be paying these deposits or paying these taxes more frequently? Okay, then a change will be made. But if you're a new business, you get this first year to kind of figure all that out. 3 Green, like we just mentioned, is going to be a monthly depositor, so we'll pay in the 15th of the next month. This is all just talking about you should get a bit professional to help look at your taxes, make sure that you're doing things correctly. You don't want to be cutting anything and shortchanging the government on taxes. And we have mentioned EFTs before, electronic funds transfer payment system. This is EFTPS, a payment system. So for example, I pay my taxes or I get refunds and my accountant has my banking information. So then if you get a refund, you automatically get put in your checking account. Okay, you get put into your bank account. If you get a payment, he hits a button and you automatically just pay it. My brother-in-law has him and my wife or sister, work, and then he also designs homes on the side. So he has another company. So theirs is different. So it could be month to month. It could be a little bit different as far as payments. So then they don't do electronic funds transfer. So there is still the option to not do it. Businesses might be required, but that's all that's talking about. A lot of times we don't go over any of this, but wage garnishment is something you might see on a study guide test. Garnishment, if someone is going to garnish your wages, that means they're taking money out ahead of time. A lot of times things like back child support, not paying, back taxes. They're going to pay fees, fines. They'll take it out if you show that you're not able to pay. They will take it out of your check before you get to do anything with it. Legal deduction from an employee's paycheck is called this wage garnishment. This is the process that requires an employer to hold a portion of their paycheck to court or court-ordered settlement, child support, loans, taxes, damages, overpayment of benefits, unemployment benefits, or any of those things. So if you ever hear garnishment, wage garnishment, that means the government or there's an order being put in place where their employer will take the money out and send it to the company or person, the party, whoever it might be, to help slowly do payments to get this bill paid off. So that's just something you might want to look at. All right. Generally, is payment of this liability for employee income tax, Social Security, and Medicare. It tells us right here, paid cash for employee income tax, $980, Social Security, gives us these numbers. Okay, now it's not all easy like that. Sometimes we will be given, so employee income tax, hopefully you are starting to kind of understand the employee income tax number is that one that we use these sheets. That's the employee income tax, okay? These other two, Social Security and Medicare, they gave us the numbers here, but in your problems, you might have to multiply those by 2, okay? And why would you have to multiply them by 2 if you remember from 13.3? Because we withhold them from the employees and then we have to match Social Security and Medicare. In this situation, they give us all the numbers, the debit payables. We're getting rid of these off our bills. We're paying them in cash. That's fine. But in our problem, sometimes you'll have to multiply Social Security by 2 or Medicare by 2. Okay, so just to be aware of that. You can see we're paying these bills off. We have all this Social Security, then we pay it off. Okay. The 15th of each month, the liability account is a result of payroll transactions recorded throughout the December. This debit to the liability accounts reduces the balance to 0. Okay, that's all we're doing. We're getting rid of the liabilities by paying these off. And we got to get to the government anyway. This is all just talking about what you saw in the transaction. So nothing fancy. Okay. So we will debit employee income tax first, Social Security and Medicare. You'll just have to figure out if we got to multiply Social Security and Medicare by 2 or not. These are just the steps. All right, now we got to pay federal unemployment tax and state unemployment tax, FUTA and SUTA, or FUTA and SUTA. I'm never sure how they just started that. Taxes are paid at the end of each month of each quarter. Liability amount is more than 500. That's not really anything testable either, just kind of background information. All our outstanding liabilities and unemployment need to be paid up by the end of the calendar year. Basically, what we're doing is the way we have things set up is 3 Green is not required to make any quarterly tax deposits. They are telling you there could be some quarterly tax deposits. We are not required to do so. So what we're going to do is pay it on the 15th of the next month, like we do our employee income tax. That's all that is. Not sure why they even, it's just some background information. Okay. So now we get to the next journal entry. The first one is paying up employee income tax, Social Security and Medicare, ours and the employees. This one says pay cash for federal unemployment tax for the quarter ended December 31st. So we're just paying the tax at the end. When it says at the end, all it is you put the date, the last day of the month, unemployment tax federal. Play it out. You don't have to match it. You don't have to do anything different with it. It's just the way it is. We're just going to debit unemployment tax federal and credit cash. When you get to state, pay cash for state unemployment tax. They don't even give you an example because it's the exact same thing. Okay, when we do these things, we get the balance of both of these federal unemployment tax and state unemployment tax back to zero. You just debit the unemployment tax state or debit the unemployment tax federal and credit cash. Okay, and we'll see that in our work together. Okay, you good with that one? Like I said, there's a lot of background information, a little bit of this and that. But our problems are going to be kind of, sort of, we'll just got to remember how they're worded, pretty straightforward. We'll continue on with the video and we'll just go right to the work together. That way we don't have to wait 10 minutes for me to end the meeting, pause it, restart it and everything. We'll just go right to 13.4. Okay. So this is a little different. They got federal income tax withheld, employee. You see how this says employee? Y'all see that? It says employee Social Security, employee Medicare. What do we know about Social Security and Medicare? When we pay it, it's employee and the employer has to match it, right? Okay, so just kind of think about it. Over here, it says tax account credit balances. We have these payables that we need to pay at the end of the quarter. So we have federal and state, we'll have to pay those later. You have the chart of accounts, kind of helps you out. Okay. So it says using the payroll data from March 31st. So that's why we're on the 31st tab. We need to prepare a journal entry for all these taxes that we withheld. Okay, this is Tesla Electric. They're a monthly scheduled depositor, just like what we've learned. We're going to use a cash check. We're paying check on the 14th page number. Using taxes due to the federal government. Okay, so that's the step one. So this is first one. So it says using the payroll data from March 31st, we need to pay these taxes. This is the payroll data. Okay, so when we are using the payroll data from the end of the month, we are paying the 15th of the next month. So it's April 15th. They're getting kind of tricky in the work together because they don't give you the date. We are working with March 31st payroll. So we're paying on April 15th, the 15th of the next month. We have employee income tax payable. And this is check number. It tells us right there in the directions 495. And our March 31st data says federal income tax withheld. That's from those sheets. Is 1,320. So we will put 1,320. Now we will do a cash credit here in a minute, but they don't give us that number, right? We don't know it yet. Okay, so we know when we're paying our payroll taxes, like they're asking us to pay this right now, we know we're going to have to pay Social Security tax payable. But we don't know how much. we see it says employee social security. Well, we know we have to match this from what we withheld from them. So you need to take 1,331.76, multiply it by 2 to get what our payment is. And the payment is 2,663.52. You will do the same for Medicare tax payable. Oops, I always hit tab. You will go, we're taking 311.46 of out from our employees. We need to match it. They make a big, they say employees, so we got to match ours. So we take 311.46 times 2, and you come up with 622.92. Add our debits up that we're paying these payables off. We're paying these bills off, right? Whenever you pay a bill off, it's a debit to the payable, and you credit cash for 4,606.44. Do you understand why you're multiplying by 2 on these? Because it says employee and you need to do both. All right, number 2, it says use the tax account credit balances. Tax account credit balances is this tab. You got to kind of think about it. It's kind of unusual how they're doing it. That's okay. To prepare journal entries, plural, for the payment of federal unemployment tax and state unemployment tax liabilities. Assume both checks prepared on the due date for the federal tax. Check numbers 522 and 523. All right, so we're paying these are at the end of the month, April 30th. We pay the taxes at the end of the month. Usually they will tell you these dates. That's why it's a kind of unusual. Unemployment tax payable dash federal. They told us check number 522. We do federal first. And they tell us, and we're just paying that. Why are we not multiplying by 2? Because we don't need to match it. Okay. And that is what we're looking at for 13.4 work together.